Good morning, everyone. Thank you all so much for joining us here this morning for the 11th annual Go4Europe conference. My name is Alan Dobkin, managing partner at Catalyst Investments, and I'm very honored to be moderating a panel of such distinguished guests from both Israel and abroad. With us today, we have Mr. Maurice Levy, from Chairman and Chief Executive Officer of Publicis Group. Mr. Levy joined Publicis in 1971. Became the chairman in 1984, and under his stewardship has transformed Publicis into a leading global powerhouse of top creative advertising and marketing agencies and a pioneer in the digital online communications. Also with us today from Paris as well is Baron David de Rothschild from the Rothschild Group. Baron Rothschild is a direct descendant of Meyer Amschel Rothschild, the founder of the Rothschild dynasty. He's been in the business for 40 years and has worked in different branches of the family firm and became chairman of the Rothschild Group in 2003. Also, Mr. Dan Proper of the OSIM Group. Dan has been the chairman of OSIM since 2005 and spent 25 years as a CEO. He's also the chairman of the Supervisory Council of the Bank of Israel and the Federation of Economic Organizations in Israel, and holds board memberships at leading companies including Teva and Checkpoint, as well as an academia at the Technion, Weizmann Institute, and Ben-Gurion University. Mr. Yonatan Altman, chairman of Amit Polak Matalon law firm. Yonatan is a leading legal advisor in the fields of life sciences, clean tech, internet, communications, and information technology, and has expertise in venture capital and private equity. And finally, Mr. Rurik Halaby, chairman and founder of AgriCapital Corporation. Rurik has 50 years of investment banking experience, investment management experience, engineering experience, and since founding AgriCapital 30 years ago, he's worked with a multitude of clients covering the spectrum of the food chain in the US and countries around the globe. With that, I'd like to invite our panelists to please join us on the stage and engage in a dialogue on M&A. Thank you. We'd like to kick off the discussion with Baron David de Rothschild on the state of the global M&A markets. Global M&A markets more or less recovered following the peak of global financial crisis in 2008. In 2011 and 12 being record years, surpassing 2007 levels. That said, this year in 2013 has turned out to be a different story, with global M&A in the doldrums year-to-date through September. On a year-to-date basis, the global number of deals declined close to 20% from year-ago levels during the first 9 months of 2013. The overall decline in the number of transactions has been relatively uniform across the largest markets in the US, in Europe, and elsewhere globally. Baron Rothschild, companies are sitting on historically high levels of cash. Interest rates are low. Financing seems to be generally available. Equity markets are in very positive territory. Why are there not more M&A deals happening this year?
Well, good morning, everyone. It's a privilege to be here. As you said earlier, we've gone through an extraordinary period starting in 2007 when the interbank market closed. Then we had the Lehman, the subprime, the sovereign debt crisis. This is a tsunami. This is not just a sequence of a few economic or financial problems. Since that period, the overall M&A market has contracted in the world massively. Now, during this period, of course, the corporates have not stayed inactive. They have reduced their cost, increased their productivity, restructured their balance sheet, and they have cash. So, as you say, in theory and in practice, the moment is favorable for them to start being more active and doing more deals. But there still is, I mean, the big markets are US, UK, Europe, and there still is in that part of the world a lack of confidence. I think we're coming closer to a moment where things may start again, but it's understandable that in spite of favorable equity markets, low interest rates, available cash, there still is some reticence to start acting too quickly.
Okay, thank you. What's interesting, though, is while the number of deals in 2013 has actually dropped quite sharply by 20%, the overall deal value in 2013 is actually up in most markets. For example, in the US, it's up 6%, in Europe, it's up 13%. This increased dollar volume is clearly reflecting the fact that there's a lot of significantly large transactions, kind of blockbuster M&A deals. In fact, we analyzed the last 2 years in terms of the largest M&A deals. And if you look at year-to-date 2013, the 10 largest announced transactions sum up to about $300 billion worth of transaction value. And when you look at 2012, the 10 largest deals are about a fourth of that, about $70 billion. So what's interesting is that certainly the large corporates are very confident and comfortable to make significant strategic moves in 2013. So why is this differentiation between the large corporates making very significant moves now, whereas in the kind of lower or mid-market M&A, we're not seeing this type of activity? Yes.
Well, look, first of all, the large corporates have by definition a large footprint. So they're slightly less sensitive to economic environment, because if you have in some parts of the world slow growth or a business that doesn't go too well, we've got other parts of the world where things are better. So it's more balanced. Secondly, the big deals are most of the time paper deals, i.e. Where the values are relative values between one paper against another paper. There might be a cash component, but usually it's a paper deal. Therefore, it's easier to do a move of that kind when it's a relative value rather than absolute value. And then lastly, when you're very big, and when you have difficulties in continuing growing the top line, you have to start looking for mergers that create synergies and new opportunities, and therefore it is understandable that blockbuster deals appear even in periods of uncertainty and difficulty. And I must say that, I have to do a bit of publicity for Rothschild. We were extraordinarily proud to act for the visionary sitting next to me in his merger with Omnicom, which illustrates the fact that even without an improvement in the economic situation, it can still do successful big transactions. As for the mid-market, and I will stop, or the small market, obviously those companies are a bit more vulnerable because they have a lesser large footprint, and therefore they're more sensitive to what happens in their region. Secondly, they don't always, until recently, they don't always have access to financing as easily as big deals. It's always easy to finance a big deal. It's not terribly easy to finance a small or medium-sized deal. Thirdly, they were very supported by the private equity industry, which again, through the crisis, went through a very big shake-up. Now they're back on their feet. They've raised a lot of money, and therefore I think that we're not so far away from improvement in the market. And I think 2014, 2015 will be better years even for mid-market. Okay,
thank you. One final question for you with regards to what's happening in emerging markets. They've been a real interesting active markets for the last number of years in terms of M&A. But this year again, we've seen a significant slowdown similar to the rest of the globe. In Central and South America, again, number of deals down 20%. In India, deals down 20% and transaction volume down 35%. Africa, the Middle East, also 20%. The only real bright spot has really been China, that's held their ground somewhat this year and up slightly year to date in terms of the number of transactions. And of course, Israel, which we'll talk about shortly, which is having a very interesting year M&A-wise. So in terms of the major markets, outside of China, in terms of the developing markets, is this weakness in developing market M&A signal the longer-term reversal as to what we've seen in the past years? Or is this something that is just a short-term kind of lag in the market?
To give you a quick answer so that we can hear the other speakers, because I've spoken too much, I think it's not a reversal. I think that there's a bit of a slowdown in a number of emerging markets. I think that they've gone through shake-up in the stock markets. They've gone through volatile movement on currencies. When people thought in the U.S. that the quantitative easing would stop, the big institutional investors started moving out from those markets, hoping that the interest rates would rise on the dollar, and that had an effect of a big slowdown in the stock markets of the emerging markets. But having said that, in mature markets, which are going to grow slowly because the Europe may improve, but it's not going to be a high growth for a long period of time, people will be looking at opportunities in emerging markets, and therefore they will remain a key factor. The developing countries will remain a key factor on the map, and the businesses in developing countries will certainly continue looking at Africa and technology transfer for more mature markets. So I think this will come back. And again, if I could do a bit of publicity for Rothschild, one of our great clients is a big retail business called Casino, run by a remarkable friend of Israel called Jean-Charles Daouri, and his biggest investment has been in Brazil, where he owns the largest retail, the food retail business in the country. Thank you.
Thank you very much. Moving now to Mr. Levy. Leading experts have for years questioned the ultimate success of M&A, including a recent report from Wharton's Harbir Singh and Harvard's Clayton Christensen, reporting historically high level of M&A failure with rates as high as 90%. Publicis is clearly no stranger to M&A. The group executes multiple acquisitions annually, has completed numerous multi-billion-dollar acquisitions over the years. Judging by your growth and share price performance, which has gone up 4 times in the past 5 years, M&A must clearly play a key role to the group's success. To what do you attribute Publicis' considerable success in executing on and integrating acquisitions to date?
It's a tough question, but first of all, I would like to say that I'm always extremely pleased to be in Israel, and it's a real pleasure for me to be here today. It happens that when you look at our recent years of M&A, the last 12, 13 years, we have been quite happy and lucky because 95% of our operations have been extremely successful. The difficulty when you are acquiring agencies in our field is to make sure that the people, because what do we acquire is intangible. We acquire a portfolio of clients and people who can walk out of the door immediately after we have paid and signed a big check. So the whole issue for us is to make sure that they stay, that they are happy, and they continue to build the business, which is probably the most difficult thing in our industry. How have we been able to do that? Honestly, I think it's based on one single word, which is respect. If we respect the people and if we make sure that we are true to our words and that the promises that we are doing and we are making at the time of signing an agreement are met with the reality of our behavior after the acquisition, I think the people feel good and stay with us. During the last few years, we have made a lot of acquisition, and the